I would like for us to please welcome Mr. Robert Brine. He's the Director for Cyber and Intelligence Solutions at Mastercard, Southern Mastercard. Thank you.
Hey, good afternoon, everybody. Welcome back in the room if you chose to take the graveyard shift. I hope you're in safe hands. We'll find out together. Okay. Thanks, Fifi. Good to see you again. So what we've got is an interesting time, okay, in terms of both the agenda here at the Bitcoin conference, Blockchain Africa, and also in terms of what's happening in the industry and the market. Okay, so together we're going to go through what we can cover in terms of scaling and securing this ecosystem, and then also hopefully shed some light on what we're up to as Mastercard. Okay. So we're going to cover these three agenda items. Why is crypto relevant to us? How are we interacting with the ecosystem? Really what's going on out there? What the coverage is like in terms of product focus, and hopefully give you some insight into the product strategy, okay, and what we're doing. And then what's our philosophy? The function that I sit in also looks after some of the products and also helps to manage some of the risk. So overall, what we're trying to do is to help make crypto accessible, okay, putting in an element of trust and safety and security. So we've already got over 27,000 issuers that have got a crypto card program. So that's a fairly substantial amount. There's 3 billion of our cards out there in the world. And on top of that, we've got around 90 million plus acceptance locations where those cards will work. So hopefully you can start to see that card as far as an acceptance platform, by linking the two worlds, it's going to make ubiquitous acceptance of payments a real reality. And it also means that what it can do from a financial inclusion point of view is pretty significant. We try and cover everybody from a consumer to a business to a government and everybody in between. Okay, so that ecosystem view is kind of what I'm carrying through this. So welcome questions at any stage. I think there are some floor mics. If we had a cube mic, we could throw it at you. So some of the stats that we saw in our new payments research in 2022, okay, is that around 48% of customers globally have or would consider buying cryptocurrency. If we dial that down into a mere Middle East and Africa level, it's getting close to 68%. If we look at those that have done a wallet reload in MEA, it's actually something like 49% of customers globally versus 70% in the Middle East and Africa. Okay, so adoption, you know, the time is now in terms of Africa, there's definitely market demand. Okay. In terms of some of the risk, there's some other additional insights, yeah, and how people are feeling about it, what it means in terms of trust, and also what it means in terms of regulation. There's a really interesting dynamic there. Okay, certain to say that a really high, more than half, okay, are considering or using crypto in the card space or crypto as a wallet. Yeah, so it's very exciting. What we've got in terms of the rest of the architecture and how this hangs together. I chose a picture of a bunch of pins stuck together. Okay, it's pretty fragile, but we also think about when we build a suspension bridge. Yeah, if we build it out of a single piece of steel, if it fails, okay, it's going to fail catastrophically and fast with very little warning. On the other hand, if we bind a lot of steel strands together, it should make a lot of noise if it's failing. Generally, it tends to be stronger. Okay, the function of it is a lot more purpose-driven, and so that's kind of the design approach that we take to everything in terms of both crypto and payments. Yeah, it's to try and enable trust in the transaction and how we can consume different bits of connected intelligence, either through a transaction, an engagement, the KYC or KYT process, as you're doing a crypto trade. Okay, and that's what we try and layer through platforms like CipherTrace, one of our acquisitions, to give crypto insights and analytics and intelligence. what we'd encourage you to do is to try and put our expertise to work. Okay, we've got a lot of broad programs of how we reach out, whether it's central bank, government, CBDC programs, pilots and things around the world, through to a crypto practice in our advisory team that will do everything from card design to a crypto wallet program, launch, run it, and then deploy it, all the way through to working with an exchange, a currency provider, a wallet, to do different elements of what you need, okay, and to make this ubiquitous reality of kind of crypto payments in the palm of your hand on your device a real reality. So maybe just a show of hands in the room in terms of some card metrics or activation. A show of hands who's got a card or a credit card or a debit card on them, if you wouldn't mind just indulging me. Okay, and that's a physical plastic. If yes, you can keep your hand up. Okay, and if it's not a physical plastic, if it's actually on your device, your token, your ring, watch, something else. Okay, so pretty low in terms of digital adopters in the audience. Okay, Fifi, what do you take away from that? So interesting. On the other hand, ChatGPT users. Okay, yeah, we won't go any further. Okay. We could digress. Yeah, so I think it's all about choice. So just to illustrate a transaction method, so the way that you paid for the conference, yeah, did you do it through a gateway? How far away from being a reality is it that you would use a cryptocurrency, yeah, or your wallet, from being able to do that when the gas fee isn't more than your car? Yeah, so that's kind of the challenge, I think, of where we are as an industry and as a time. It's about providing choice. If you don't provide choice, you're not going to provide access. If you don't get the access, you're not going to get the usage and adoption. So the same is true if you are a Zappo banker, yeah, and you're designing a wallet app and it takes 25 clicks on top of the KYC to actually get there, then I would suggest you're not in this movie of providing choice, access, and trust. Yeah. So that's some of the simplicity that both security by design and some of this design thinking can carry through. Fair. We can have any questions at any point, so please feel free. So the philosophy out there is really pretty straightforward. What we're trying to do is to put a bunch of choices. Okay, it's about digital value, it's about adoption, it's about a straightforward philosophy, and all of those things that Nakamoto wrote about in his paper, yeah, still remain. Okay, and on top of it, we would layer things like inclusion, access, transparency, and so on. Yeah. Okay. On the other side, okay, and this is where we move maybe from glossy graphics and pictures into some more practical elements, yeah. So we've also got to deal with this convergence of different technologies. There's a whole lot of things that are happening, both from a risk point of view and from a product usability, yeah. A customer, a card holder, an account holder doesn't want to interact or engage with something that's either clunky, has a lot of friction, has a low chance of probability, and also when you get up to the terminal or to the till, you might get declined. Yeah. On the other hand, in removing a lot of that friction, you also have to consider how you take away either bad controls that inject risk into the transaction, okay, or into the payment flow, or into the use case, but at the same time, ones that enhance security. So in this landscape of technologies converging around 5G, around nowhere to hide in terms of risk, around the chances of a cyber attack happening. We have something like 200 attacks a minute on our network. Yeah. All of that is happening at an age where quantum computing is becoming a real kind of lifetime generational achievement. It also means that the traditional elements of cryptography, of security and key exchange, you know, these are going to be key challenges, I think, that we're going to have to address and to cater for. So it kind of means that if you haven't got a really robust process to deal with and accommodate all of these, with everything as a service, including fraud, including cyber attacks, including malware, okay, including bust-out schemes and scams, then this is going to be a fairly dangerous space if you're leaving your bank account, wallet, cold storage, hardware, supply chain exposed. Okay? And by exposed, I do mean like in a data center that you think is secure, it actually may not be that secure and robust, okay, to survive all of this at the same time. So that's the space that we now inject digital currencies and crypto into, and then we'll see what happens. Yeah, and I think we're going to have fun. So that stat that's at the top there, 27,000 Mastercard issuers already do crypto. So these are issuing member banks of ours who have a crypto wallet that are issuing products that support crypto. Okay, so fairly good in terms of market penetration. This landscape view is kind of trying to demonstrate a flow of funds, okay, whether it's on-ramping, okay, moving from fiat on the left-hand side all the way through to deposit taking, and everything that can happen in between. So this is our view of how we think a flow of funds might happen, and also how we think access to different markets can happen, different use cases arise, different risks actually materialize, and we also have to cater for those and how we deal with and treat them. Yeah. So in terms of the insights and the analytics that I'm going to get into, I'm going to cover some of what we can do in terms of e-commerce transactions as an example, what happens in the different flows, and also some of the intelligence that can actually be gleaned from a digital transaction or a crypto transaction. Yeah. In terms of the rise of some pretty scary stats, we've seen something like 900% increase in cryptocurrency asset transactions. And we see that that definitely, in terms of global statistics, what we see in MEA, in Africa, there's definitely a high representation. Yeah. Equally, a large number of those transactions, okay, up to 4 times, have a higher fraud rate than we might see on other transactions. Yeah. So that's a substantial risk profile that this new surface of payment flows, of money services business for fraud, for organized crime, for syndicates, is definitely present and prevalent. Okay. We think that there will be something close to an 80% increase in the rate of fraud on these transactions. Yeah. And so substantial measures have been taken to take those 27,000 member banks or issuers and protect them, okay, with our Mastercard brand. It also means that at a cardholder impact point of view, there's actually zero liability. Yeah. So provided we do the necessary things as a cardholder, you should be rest assured that that trust, the zero liability guarantee, is going to be carried through. In 2021, we saw close to 14 billion in terms of cryptocurrency-related fraud losses. So this could vary from things like bust-out schemes and scams. Yeah. And the impact of that in terms of trust, yeah, when you've got almost ubiquitous demand for crypto, exposure to crypto across all kinds of different LSMs and segments and profiles of consumer, it's really sometimes a challenge to cater for that. And then on the other hand, you've got scams and schemes that are choosing to take advantage of it. So that's, I think, where a lot of the regulatory concern, I think, is coming from, is ultimately protect those users. Okay. Any questions on that before I move on? No? Anyone here had a personal incident around fraud or cryptocurrency scheme wallet? Any horror stories to share? No. Okay. Yes, please, Fifi.
Not supposed to ask questions, but I'll ask one anyway. We heard at the start of the session the fact that, I mean, this is a crypto crisis, starting in 2022. Perhaps things have gotten a lot worse. Recently, the crypto market is in crisis with all the scams and all of that and the fallout that has happened. But we also heard that perhaps what has happened now is that most of the bad apples have been thrown out the system. And I just would like the take of Mastercard on what is happening right now and whether you do think that most of the bad apples are out.
Look, I think it's our organizational experience, and we've been in payments doing this for about 60 years. And I think the reality is that those bad apples would have also been thrown out of the card space or payment space. And so I think, if anything, we're actually going to see more and more bad apples emerging, because that's some of what human behavior looks like, unfortunately. So I don't think that that's necessarily true. I guess we'll wait and see. Yeah, hopefully not. Hopefully less pain to come, but we'll see. Yes, please. There's another question. Great.
Thank you. Sorry, my question has nothing to do with the safety of crypto wallets or the rooting out of bad actors and the like. It's a more practical question relating to payments on using one's Mastercard. Assume I were to make a payment, an offshore payment, using not rand but crypto. How would that be viewed from an exchange control point of view?
Yeah, so in terms of the South African Bank Directive, I've got to see where you're from.
Sorry, I should have said where I'm
That's
from.
okay.
I'm a lawyer from ENS Africa.
Hello, Prof. Welcome. So I think in terms of the SARB directive on crypto payments on card, okay, cross-border card transactions are not allowed. They're not permitted. Domestic card transactions in South Africa are, provided the exchange is registered, and ADLA and various other, and it has to be treated as a financial instrument.
And I think your answer is 100% correct. So one would, hearing what you're saying, one would then effectively be prohibited or stopped from utilizing a MasterCard using my crypto rather than my fiat to purchase goods offshore on an e-commerce platform or the like.
Unless the entity that you're purchasing crypto on is domestically domiciled or is South African domiciled, then the answer is no. If you're doing an e-commerce transaction, in other words, I'm going to buy a new pair of shoes, purchasing it with crypto as a store of value as opposed to a fiat currency, then that's an interesting discussion.
Okay.
I think the answer is that actually acceptance exists. Right? There is the acceptance rail. My question back to you would be, why would you want to do that when, for a low-value payment, there are so many more accessible transaction types that you could use? But yeah, I think it's possible.
Okay, thank you.
It does happen.
Absolutely.
But purchase of crypto different from purchasing goods using fiat versus crypto and blockchain.
Yeah, and it's more the purchase using a crypto. But thank you.
Thanks, Bob.
Thank you very much.
Okay. Let's check the timer. Okay. So we kind of run in 4 major strategy blocks, I think. So the first piece I think I've spoken about, and I think you're starting to understand why that insight exists, that for 50 years we've been doing card and transaction and payments with security at its core. And there are a lot of actors out there that seek to intercept, inject, put malware into the transaction, and the 200 attacks a minute kind of speak for that. What we can also do is to improve some of the AML compliance, some of the transparency, okay, the fact that I can search on a block that was just mined, just come out of the mempool, I can see transaction IDs, and I can identify what IP address was used as an example, who that wallet potentially belongs to. In terms of public coin, there isn't a lack of transparency at all. I think we'll all agree. In terms of private coin, then things become a little bit more challenged. But including coins like Monero, we've got some insight. In some of the other pillars, in the interest of time, I'm going to skip over, but suffice to say that we can get the card program activated for you if you're a bank. If you're a fintech and you want to start doing card, crypto, wallet transactions, and to merge those two worlds because of ubiquity and access and because of consumer choice, then definitely we can help. In terms of crypto enablement, buy and sell, custody as a service, then there's some strengths and cycles that we can support you with. And then finally on the enabling blockchain value transactions, like the Prof just mentioned there, in terms of acceptance, can I actually pay for that pair of shoes on Amazon, or Pick and Pay is essentially doing that domestically anyway. Okay. So the question is, how does it extend to cross-border? How does it sit in our jurisdiction in the Financial Intelligence Center and reporting requirements? I think that's the next step in terms of where the regulatory directives and white papers need to move into a framework for supervision and oversight and all of the other things that that central banks do so well. In terms of a timeline, just taking a step back, so 2017 we really began this ecosystem, and things are progressing. So there's no crypto pause as far as we're concerned. Things remain that, look, card and payment means are still critical keys to be able to enable crypto, okay, and the use cases and all of those acceptance challenges that we have. And we're starting to look at things like CBDC expansion, NFT expansion, and so on. My final straw poll would be to ask in the audience, in terms of NFT usage, understanding, maybe a show of hands if you've got either yourself a Roblox account, if you play Roblox, if you're using it, or if you've got a child who's maybe in that space. So just think about the generational gap in terms of adoption. To buy a new skin in Minecraft or to buy a hat in Roblox, I mean, that's an NFT. And adoption, you look at the volume of transactions in that space. Forget about metaverse and Web3. The number of interactions on a gaming platform, which is pretty ubiquitous, accessible, pretty transparent. There's a significant amount of commerce that's happening there already. The final takeaway I would ask you to take is have a think about this ecosystem, have a think about how some of the incumbent players cater for each other, think about some of the risk landscape, and please feel free to reach out to us. Questions? Sure.